Hi, everybody. It's Birb, Adrian speaking. Welcome to another episode of the Nest Show podcast. And today is actually no different because we've already kind of like got you, I think, used to seeing many talented people, many professionals from the crypto space and all around. And like I said, today is no different. My good dear friend Will Clemente, actually, who's been on the shows on the broadcast with me some time ago, is joining us today. Is joining us today again to discuss what's hot in the Bitcoin market in terms of on-chain analytics. We're going to actually give a proper deep dive into understanding what's happening right now in the markets and how it can potentially can unfold into the near future. So if you guys are tuned for the show, you cannot miss this one. This is going to be awesome. Well, Clemente, welcome to the show. What's going on? How's it going, buddy?
Hey man, I'm doing well. How about yourself? I'm just getting ready for this Bitcoin conference here in 2 weeks.
Amazing. Yeah, I know you're getting like so many actually just podcasts, shows, interviews to participate in. So I definitely appreciate your time generosity. So which is why we're going to keep it kind of like, sweet and simple in terms of how many points we are going to get through. So why don't we kick it off with a very simple kind of like, just summary of how's 2022 be going on so far for you?
It's been going well. I work for Blockware Solutions, which is a vertically integrated mining company. We got a lot going on there, kind of behind the scenes. What I specifically do there, so I guess I should back it up for anybody who doesn't know. We're what's called a vertically integrated mining company. So we do everything with Bitcoin mining you could think of. We source machines. We'll sell you the actual hardware, as well as we'll host the machines for you. So if you want to get involved with mining, but you don't feel like doing all the maintenance on the machines and having something that sounds like an airplane engine in your house, we can do all that for you for a small fee for doing that. So that's our hosting business. We also we dabble in staking with some other protocols as well. So pretty much everything you can think of on that front. We just opened up a new facility in Kentucky, which was what I had posted on Twitter, and I saw you had like retweeted it with a little a meme. So that I got a little kick out of that.
Yeah, yeah.
But yeah, so that's what we do. What I specifically do though is I head our research arm. So we have Blockware Solutions, which is again the main business, but our research arm, which I head, is titled Blockware Intelligence. And so my role here is basically I head the research arm. We have two other analysts. We're bringing on more over the coming months. And so we kind of break the research arm into three different segments. We have, first of all, the newsletter, the YouTube channel, and the podcast. And so on the newsletter, we send out a weekly newsletter, which is just, weekly update in terms of market structure from an on-chain, derivatives, and technical analysis perspective for Bitcoin specifically, as well as we also cover, just general equities. And specifically, though, that section is also focused on crypto-specific equities and some fundamental analysis as well as technical analysis on those equities. And then we have a third section within the newsletter, which is on mining in specific, obviously because we're a mining company. So that's the newsletter. We have a YouTube channel. Now, the YouTube channel is kind of a two-part thing. We have interviews with individual figures in the space. We've done about 35 interviews, including people like Michael Saylor, Raoul Paul, Preston Pish, Anthony Pompliano, some of these, bigger names in the space. Got some interesting folks coming on there in the next month. And then the other, the second part of the YouTube channel is we do educational videos. So that's from the front of on-chain and derivatives education stuff. We do mining educational videos on different mining metrics and how to analyze the mining market. And then as well, just a general technical analysis series that our equity analyst just started as well. So that's the YouTube channel. And then we have the podcast. And obviously the podcast is just pulling the audio version of the interviews from YouTube. So a little double dipping there. But yeah, that's pretty much it. And pretty soon we're going to be launching a trading arm in the near future, putting some of our research to work, as well as starting to keep some of the proprietary stuff out of the newsletter and keeping it for our own internal purposes. So a lot of stuff going on here at Blockware. We just launched our partnership with FTX. Got a couple others following as well. So You know, again, a lot going on, and I've been keeping busy here, and although I guess the overall engagement, as I'm sure you've noticed as well, on Twitter and YouTube has kind of gone down as a lot of the exuberance kind of cools off in
It
the
doesn't
general
show. It
market.
doesn't show from your side, though.
Yeah, with the actual stuff going on internally at the company, there's still plenty going on. I think like one thing that maybe people that are retail market participants, even though I am in my personal account to an extent, obviously, but people who aren't kind of on the back end of everything going on, maybe perhaps don't realize is, yes, like public markets are still drawing down, but in private markets, it's still very much a bull market in private financing. There's still tremendous amount of capital coming into the space, tremendous amount of interest coming in from different institutions, several interesting names looking to get involved in mining with us. So I'm very excited about what's to come, and especially in terms of mining specifically, but just overall Bitcoin, obviously over the next year plus. So.
Yeah, so this does sound to me as if you had a lot going on, and that's funny actually that you touched upon and developed very thoroughly on the Blockware solutions and the Blockware intelligence, or all the aspects that you are personally in charge of, being the lead insights analyst. This is definitely lots of responsibility on your shoulders, and at a very young age, and I sound like an old man here, and but I'm only like 10 years old, older than yourself, right? Although I'm bald. But I just want to appreciate how much you've grown. I have been keeping the very keep close on track of your doings overall on Twitter, with the amount of content you publish, with the amount of, again, insights you share on a daily basis. And this has become like spectacular, man. I'm so proud to see my friends really making it, and you're definitely one of them. So congratulations on the growth. And while we are at it, touched upon that, you are actually about to break this magical barrier of 600,000 followers on Twitter. We are talking about 599.8 as of now. So I'm pretty sure by the time this podcast is actually released, you'll already have broken for this magical resistance, if you will. How is it actually that you grow so fast, like on Twitter? Like, do you have any magical recipe for it?
Sure. No, first of all, thank you so much for the kind words, man. Your account has grown a lot as well, so it's been cool to see that, and hopefully by the next bull market, I got a beard like yours. We'll see. But at least maybe I'll get a little peach fuzz by the next bull market. But yeah, as far as like Twitter accounts go, I would just say find something that you're interested in within this kind of niche ecosystem. The overall crypto market, is still very small in the grand scheme of things, and with that, as the market's kind of in its infancy, there's plenty of roles, plenty of areas to get involved within the space. For some people, that might be market analytics. For some people, that might be development. For some people, that might be just posting memes and shit posting. It's there's a little something for everybody in this ecosystem, and it's still early enough that you can get in there, make a name for yourself. I would say, just stay consistent. I think that's the biggest thing. It took me months and months and months to kind of get my account off the ground. I was looking back at kind of like my Twitter analytics the other day, because as we were talking about previously, the engagement has definitely come down over the last, call it 2 months or so. I think that's a reflection of a lot of the kind of exuberance leaving the market, a lot of the hype coming out of the market, a nice healthy reset. But anyway, so I was going back and I looked at like June, July of 2020 when I first launched my account. I got like 5 new followers. Like I got like 50 likes total for the whole month. And, it's crazy how far it's come. And I remember like I'd be working my shift in Target, like sneaking into the bathroom to like look at charts and post charts. And I think like the biggest thing is for anyone trying to grow an account or just in general make a name for themselves is you really have to love what you're doing, because that's going to be what allows you, to stay so consistent, because the consistency is really what it's all about. If you stay consistent, you'll get a break eventually. That's with social media, you just kind of need to get retweeted or something by that one person. You just need to get that one breakthrough, right? And I think I'm a believer in luck. Luck has a big role in everything, but you have to put yourself in the position to get lucky, right? And so, just stay consistent, and keep putting out quality content. And if you love what you do and you stay consistent with it, I think eventually you could break through, given how niche the kind of community is. So, I guess that would be my short little advice there. I think in a sense though, my timing was pretty tremendous in terms of I came into the market at the end of 2020 and launched my account in July of 2020 when Bitcoin was at like 8 or 9,000, right? And then we went from $8,000 to 20K in like 3 or 4 months, and then proceeded to run all the way to 60K, and then 2 months after that. And so, with that, you have just a tsunami of new market entrants, and with that, new followers and people coming into the community. So that definitely played a huge role. But I think like given kind of the current market conditions and how, as we talked about, everything's kind of cooled off, you have a good opportunity to kind of build out some of your infrastructure, dip your toes into kind of just how to navigate the waters of Twitter and just throughout the community in general. And then once we start to ramp up again, you can, capitalize off of that and really drive into the bull market. But the way I see it is you really, when the bull markets come around, you really got to choose them. It's like, it's very cyclical in the same way of like, if you're a farmer, right, you harvest when it's harvest season. You better get out there and harvest your crops, right? Because, you only got a certain amount of time to do so. So I would say like, once the bull market comes, just really ramp on. That's when you're like on Twitter all day, posting every 2-3 hours, staying really consistent, because that's when you can really kind of, put your foot on the gas and propel it
harvest. Yeah. You actually described it beautifully, and I wish everybody was as mindful and respectful to their communities as you are. So definitely huge big appreciation to you for and all the beautiful people you accommodate somehow around yourself. And speaking of your success, and before we actually just dive deeper into the charts, I want to touch upon and actually highlight your very recent success, aside from what's already discussed, and your participation in Bitcoin 2022 conference in Miami that is about to happen in 2 weeks, right? Like quick point for everybody who's going to perhaps participate and where they can find you there, what you're going to talk about.
Sure. Yeah. Thanks. So I'm speaking in it's going to be like I think it's called the Future of Forecasting panel. So it'll be me, Checkmate, who's the lead analyst at Glassnode, which everybody I think knows Glassnode. They're the largest on-chain data provider. And then also Dylan LeClaire from Bitcoin Magazine, and Key Young, who's the founder of CryptoQuant, which is right up there with Glassnode. As it's really them, Glassnode, and Coinmetrics is kind of the big three in the on-chain realm. So that'll be fun. We'll probably jam all things on-chain and derivatives, and just talk about general market structure. So I'll be speaking on the 8th. And then I think that should be live on Bitcoin Magazine's YouTube if you're interested in watching it live, or we'll probably play it back after if you're interested. So it should be fun.
Amazing.
The most people I've spoken in front of is in my freshman year. I spoke in front of like 8 people for a project I had. So it'll be an interesting experience for me to talk in front of all those people. But
yeah, and we are talking about the 19-year-old here, ladies and gentlemen. This is pretty nuts. Well done. I think this is actually a good time to have a kind of like a deeper looks in what you're seeing in the charts so far year to date, what's potentially ahead. Why don't you show us a couple of charts of yours, perhaps in the newsletter reviews, maybe?
Yeah, sure. Let me just screen share real quick.
Sure thing. And in the meantime, while Will is actually playing this chart, I want to kindly recover this memory while we're at it, so that if by any luck, guys, you are not following Will Clemente on Twitter, you have to do it right immediately. He's about to break 600,000 followers on Twitter. This is pretty insane, and he deserves it all. Make sure you go and follow him at WClemente. Third, or it's 3, right? It's I.
Yeah.
Thank you. Exactly, right? WClemente I. This is the handle. Make sure you go and follow it. And walk us through what do you see in the charts, please.
Sure. So this is our again our weekly newsletter that goes out. We're on week 31. So at the top we have a section on crypto equities, which I'm not going to go through that because I don't write this section, but feel free to check it out. It's written by our crypto equity analyst, Blake Davis. But this is my section, so we can kind of go through this. And if you want to stop me at any point, we can kind of walk through any maybe questions or comments that you want to tag on being an analyst as well. So
sounds good.
So first we'll just look at this. This is just price structure. Generally just laying out some key price levels that I'm looking at, as well as kind of this consolidation pattern that we've been in. Some people calling this kind of a bear flag. I don't really like to throw like names on patterns. I kind of just look at what the structure looks like. And to me, my point in the newsletter and it actually aged relatively well. Kind of intraday, I was just saying that I didn't see kind of the risk reward of being gig along yesterday. I sent this out at about 10:30. Of the risk reward of being like gig along, really, I didn't see that being attractive at 44,800 when I wrote the letter, because we were pressing right up against this resistance, right? And so that was kind of the point I was making here. But generally, the point I'm going to make here and then across the next two charts is that this level, this kind of red area here, this is in my opinion like kind of the most important level for Bitcoin from like a high time frame kind of perspective, because I think this is where if you can reclaim this, you can start to see some momentum coming back into the market. So obviously this is just horizontal resistance. This is also the yearly open at the beginning of the year. When we go to this next chart, 46,000 is also something called the short-term holder cost basis from an on-chain perspective. And so this pink band, this is looking at all of the entities in the market that are on-chain that we're tracking that have been in the market for less than 155 days. And then we look at what's the aggregated cost basis. So obviously some is going to be above, for some it's going to be below this line, but this is the aggregated number. And so as you can see throughout Bitcoin's history, this has kind of played out as a really key level. You see it played out as support throughout 2017, resistance throughout the entire bear market. Once we got back above at the beginning of 2019, that kind of signaled the reversal from the bottom. And then once we flipped that as support at the end of 2020, that kind of initiated this massive bull run that we went on into 2021. We broke below over summer and then retested it almost to a T at the end of September of last year before we had that push back up to all-time highs. This is also the area that I became cautious in. So kind of vocally on Twitter and in the newsletter, I got cautious once we broke below this line. And so at the time, this was at 53,000. So I didn't nail the top per se, but I did become cautious once we broke below this, because historically, whenever you've broken below this, it's been a sign of trend breaking down. And there's psychology very much baked into this. And so maybe you'll ask, what do you mean by that, Will? And what I mean by that is,
what do you mean by that exactly?
As we talked about, this is the average cost basis of investors. And so when we think about this, in a raging bull market, investors, especially newer market participants, most of these newer market participants in a raging bull market are really just buying a fair portion of them just because the price is going up, and they're momentum buyers by definition. And so whenever their cost basis is retested in a kind of a raging multi-month bull market, they don't want to sell there. They don't want to sell at a loss, right? Because once they're selling below their cost basis, they're by definition selling at a loss. And so that's why you kind of see this, serve as support in the bull market. Conversely, once we go below, in aggregate, the newer market participants are now at a loss. So once we're below this line, they're now sitting in a state of loss. And so at that point, a lot of these market participants are just buying based off of momentum. So, at that point, they're like, I just want to get out of this market. It's not going up forever anymore. I don't even really know what Bitcoin is. I just bought it because the price was going up. And so whenever that cost basis gets retested from the underside, they use that as an opportunity to just jump ship, right? Because they say, okay, I'm break even. I'll just take my losses, and I'll just take my break even and just get out, right? Because they just experienced this massive crash, and as soon as they're able to just take the money that they had put into the market, they just get out. And so that's why you kind of see this serve as this really clean kind of resistance level on the way down. In 2018, we have like 5 touches here, especially here. These are really clean touches right before that breakdown to 3K. That's kind of the psychology that's baked into that. And that's why it kind of serves as such a strong support and resistance level that currently sits again at 46,000, which is, again, in confluence with this level that we drew out, which is horizontal price structure, as well as the yearly open for 2022. So we see confluence across technical analysis and on-chain. Now, we also see, and this is the third thing, confluence again with order books. And so order books, what this essentially is showing you is all the active bids and asks in the market. And so the analogy that I kind of like to use to explain to this for normies, or maybe just people who aren't familiar with looking at order books, think of it kind of like eBay, right? When you go on eBay, you can hit buy it now, or you can hit bid, right? And so what you're doing is, if you hit buy it now, you're saying, well, I'm willing to maybe pay a little bit of a premium. I'm not gonna try to finagle the price down or try to negotiate the price down. I want this. I have a sense of urgency, or I feel like this is currently fair value to get exposure to this item. And in this case, we're talking about Bitcoin versus an item on eBay. Conversely, you can say, I don't deem this specific price fair value. I'm not going to hit buy it now on eBay, or in this sense, we're talking about the Bitcoin market. We're talking about market buying. We can set a bid. And so, for example, on eBay, something's $50. You can set a bid for, let's say, $40, and you'll say, okay, well, if the listing expires and I have the highest bid, then excellent. That's the price that I deemed fair value for it. I'll take it, right? Because that's where I decided that I was willing to pay. And then conversely, if it doesn't hit that bid, okay, cool. Someone else thought it was deemed higher value. I don't think it's worth that much. That's fine. I think that's overpriced. I didn't want to pay that. That's cool. Same thing here, right? And so what we're looking at on the screen is all the asks. So bids are buy orders set below the price. Asks are sell orders set above the price. And so this clump of yellow here is showing you that there's a large amount of asks that stepped in on Bitfinex. This was yesterday, right around 10 o'clock, that these orders stepped in as Bitcoin kind of pushed up to 45K. And ironically, or I guess unironically, this was actually the local top when I posted this. We proceeded to push back down after these asks set in. These kind of set the local top, the kind of intraday top for BTC. And the reason that I think this is important to look at, and the reason why we're looking at Bitfinex, is Bitfinex has a much higher hit rate than some of the other venues. So what that means is, the Bitfinex bids and asks in general have a higher dictation on price action than some of the walls of bids and asks that you'll see on FTX or Binance or Bybit or Coinbase. When we kind of back test this, Bitfinex by far kind of has the highest hit rate for those. And so what we want to see here, so, this isn't an end all be all thing, but what we want to definitely keep an eye on this. And what we're looking at is, we want to see for the bulls, we want to see a full filling of these bids. So maybe that sounds a little counterintuitive. The reason I say that is the following. So in the market, you have effort and absorption. So effort being the active market orders that are coming into the market, absorption being the passive orders or the limit orders, being the bids and asks set in the order book. And what I'm saying here is that if price pushes through this wall of asks, to me as an analyst, what that's indicating is that the effort, so the market orders, is outpacing the amount of absorption that's set there. The bearish scenario would be if, let's say, we filled these bids 60 to 70% and then we reversed. Well, to me, it's really not good for the bulls, because what it's saying is that the amount of absorption, meaning the amount of asks in this case, because we're talking about a wall of asks, is outpacing the amount of effort that's actually being applied into the market. And so just for reference, the converse of that would be if there was a wall of bids. The bearish scenario in that case would be the floor of bids getting broken through, because that's showing you the amount of effort or the amount of market sells is outpacing the amount of absorption there. And the bullish case for a floor of bids would be a partial fill and then a move off of those bids. And so that's actually what if I was to show you a zoomed out chart of the Bitfinex historical bids and asks, that happened several times over the last year, where you might have seen on Twitter people talking about the Bitfinex whales setting the floor. You saw a partial fill of the wall of bids that they put down. This actually happened at 33K, whatever it was, 2 months ago now. And so again, what that's indicating, conversely to the situation we're looking at here, would be that the amount of effort is not outpacing the amount of absorption in bids that are set. So that would be the bullish scenario. But nonetheless, so I know I rambled a little bit about order book specific stuff. So I want to go back to the original point I was making, which is that we're looking at order books, on-chain analysis, and technical analysis, all showing confluence of that kind of 46, 47K area as kind of an important price level for BTC.
Yeah, I got you. And I actually, from my end, also kind of like favoring technical analysis above all, although using all the other elements of the game that you mentioned. I also personally kind of like see 46,000 to play the major significant role for this kind of like a range symmetry to some extent, right? Maybe, well, some people, of course, before we head into further details and the discussion, many people, I'm pretty sure you saw it on your end too, kind of like have been calling it a bear market for a proper amount of time already, right? Well, what strikes me, to be honest, is that this could be a very strange instance of a bear market then if the price keeps going up, right? Because we had $65,000 peak in April last May. Last April, 2021. We had 28,800s in June, July 2021 as a bottom. We had 69,000, which is a higher high, right? Then we had $33,000, which is a high low. So if it is a bear market, then this is a very strange instance of a bear market that just keeps going up. And I wish we all stay in this bear market forever. That just keeps going in, right?
It's definitely been a weird quote unquote cycle, and I'm going to say something on the cycle in a second, but there's a lot of people that will say, well, if China didn't ban BTC, it would have kept running at the beginning of 2021. And then people will also say, well, September of 2021 was just a dead cat bounce, and that final leg up to 65K was just front running of the futures ETF news. I think both of those are interesting arguments, but overall, the way I see this is that I think we should kind of remove this concept of the 4-year cycle. To me, it's a bit, not to sound like, condescending or anything, but I think it's a bit kind of intellectually lazy in that we expect the same specific pattern to play out forever. And I think as Bitcoin matures, and new market participants are stepping in, I think it's going to trade a lot more freely and trade more in line with just overall macro. I think over time, Bitcoin will be kind of an indicator for macro in the same way that you look at bond yields, or we look at, currency futures, or all these different oil, all these different kinds of things. I think Bitcoin will be up there with, being a macro indicator of current financial conditions.
I think it already is. Sorry to jump in.
It
already is. Many people actually, just look at it as some sort of like a risk appetite barometer. I saw it, used by many people from the outside of crypto. So it's already kind of like fulfilling. So yeah, perfectly agree on that.
Yeah, and I think, with that, we should kind of, I won't say fully throw away, but kind of, lower the weight given to just the traditional kind of bull bear market structure that we're used to moving forward. I think the market's a lot more nuanced than that. We have a complex derivatives market, and again, just, a new class or breed of investors. And with that, I think the just overall market structure and kind of the dynamics that are going to play out moving forward is just completely different than previous cycles. I also think
maybe that's the kangaroo market that you see in the memes, right? There's a bull market, there's a bear market, and there's a kangaroo market apparently, which we're in.
Yeah, I think it's just we're just in the market. I think it's just like this binary concept of this used to be my pin tweet, but like I
Yeah,
think we need to get rid of this like binary concept of just are we in a bull or bear market. I think that's just like a
right.
really binary kind of intellectually lazy way of thinking.
True, true, true. Take 1, 2 minutes and 3 minutes to talk us through what you see in this chart open right in front of you.
Sure. So this is something called open interest dominance. So this is looking at the amount of futures contracts that are open relative to Bitcoin's market cap. So open interest just means the number of futures contracts that are open. Open interest being high in itself is not bullish or bearish. Although, as you can see throughout the chart, there's whatever 6 or 7 instances of open interest reaching this kind of upper echelon that I highlighted. Of course, most of them are bearish, but that doesn't mean that open interest rising is bearish, because the aggression built up in the open interest could be to the long or short side. It just so happens that over the last year, most of these instances have been to the downside. But if you look at like the end of July 2021, for example, that was a large short squeeze. So again, it's just telling you the number of contracts that are open. And so the big question now, as we're kind of reaching this upper pocket, where throughout the last year we've seen kind of volatility coming off of that because the amount of leverage or the amount of contracts that are kind of built up in the system, we can try to look at a few other things to kind of gauge where's that open interest position, what's the aggression of that open interest. And so what I mean by that is, again, it's just telling you how many contracts are open. There's a long and short for every single contract. There's no such thing as, some people will comment on my Twitter and be like, can you show long open interest? That's not a thing. It's just, there's a long and short for every single contract. It's about the risk of each participant throughout the open interest. So an example would be, let's say we take one of the contracts that's open throughout all the open interest as an example. You could have like a retail degen that's just looking for really, high leveraged exposure on the long side of the contract. And then on the short side, you could have a market maker. And market makers essentially just provide liquidity in exchange for getting a small fee from each exchange, but they have no directional exposure because they're hedged. So an example could be they might be short the perp contract, but long spot. So they have no directional exposure to Bitcoin's price movements. They're just providing liquidity to markets. So they obviously have a much different risk profile than the degen retail market participant that's just going leverage long on the long side. So with that being said, I think there's a few different ways you can kind of gauge the open interest. The first one is we can look at something called spot premium. So this is looking at in aggregate, you kind of add a weighting effect to all the different spot venues versus all the perpetual swap venues. Are the spot markets trading at a premium or discount to the perp markets? So you can see whenever this indicator is green, it's showing you that spot in aggregate is trading at a premium to perps. And so you can see that happen from September to November of 2020, from the end of May to the end of July of 2021, at the end of September of 2021, and we're now in this really large, over 3-month long regime. So that's one thing. It's showing you that, just overall, like from a high level perspective, that kind of the exuberance in the derivatives market has kind of cooled off.
So if I may, because this actually already addresses the very next question and one of the last questions for this show before we need to wrap it. Does this directly suggest or imply that we are looking at an actually, somewhat of a largest reaccumulation phase going on for Bitcoin right now, ahead of a larger thrust to the upside, perhaps?
Yeah, I think we are in somewhat of a reaccumulation phase. So, I'll run through this really quick because I know we're running somewhat short on time. I'm good for another 10 minutes or so.
Okay.
We have, the spot premium, which we just looked at. We have this, which is the annualized futures basis. So this is the spread between buying spot and the futures contract. So in this instance, we're looking at the 3-month futures contract, and then we're adjusting it for inflation. So this is again showing you kind of a cool off in exuberance from the derivatives market. And so with these two things in mind, I think a lot of this open interest isn't aggressive longs for those reasons. The last thing I'll say on open interest before we move on to what you just mentioned about accumulation, because I have two on-chain charts, which I think are interesting to look at in that regard. One thing you can look at is just how is open interest behaving with price. So what I mean by this is, as we talked about, kind of that 46K area is a pretty important price level. So if Bitcoin gets to that and open interest is just flat or keeps increasing, it probably means that the buildup of open interest isn't shorts because they're not being forced to close above that price level, or they're not aggressive shorts at least. Conversely, if we break above that, you start to see these like big drops in open interest paired with some spikes up in price. That's probably indicating to you that shorts are being forced to close, and probably validates that thesis here that a lot of this open interest is generally more aggressive shorts than longs. So that's one thing. The last thing on the derivatives point. To move on to what you talked about accumulation, we'll look at two charts, and then we can wrap up if you want. This one is the long-term holder market inflation rate. So this is looking at the amount of supply that long-term holders are taking in. And when I say long-term holders, I mean entities that have been in the market for more than 5 months. We're looking at the annualized rate of growth in their supply relative to the annualized growth in Bitcoin supply issuance. And so whenever this is declining, this means that inherently the behavior from long-term holders is deflationary, because by definition, the amount of accumulation coming from long-term holders is outpacing the amount of new supply coming into the market. And so currently, this is at the most deflationary that it's ever been in Bitcoin's trading history. The second chart we'll look at is illiquid supply shock. So this is a metric that I created.
Your favorite one.
One of my favorites, partially because I created it. I created it with Willy Woo back over last summer. It kind of helped me call the reversal over last summer because of this divergence. When the chart is ticking up, it means that supply is essentially moving to strong hands. What I'm using to define that is entities on chain that take in and sell less than 25% of the coins that they have. So for every 4 coins that they take in, they sell less than 1. And so as you can see, very different than 2018, this has just continued to climb, and this big spike over the last 2 weeks, diverging from price. And this is the largest divergence in Bitcoin's history. So both of these things are showing you from an on-chain perspective that we're seeing this kind of reaccumulation period paired with a nice cooling off from the derivatives market. And then the last chart is this chart. This is just looking at, which I think is just interesting to mention, the premiums in the different trading hours. So if we look at US trading sessions, European trading hours, and Asian trading hours, what we see is that since last May, the price premium that's being traded at during US trading hours has been increasing. And essentially, to me, what that's showing is kind of this capital rotation from Asia, which has historically kind of dominated the Bitcoin market, to United States-based market participants over the last year.
That is pretty much interesting kind of like point to make. I think I'd seen you post that chart somewhere, or this chart flying around one way or another, and I was pretty much curious, on the take. But I'm glad you explained that to all the viewers and to listeners. And well, having a minute or 2 or 3 left, then I want to ask, like, if you have any specific, top scenario to kind of like, expect from the charts, from the on-chain perspective. Do you look at this illiquid supply kind of like, just way observation to establish that when potential peaks may arrive, or that's not really your part of interest, to be honest?
Yeah, I just as far as like specific kind of quote unquote price targets, I think that's really difficult, especially in this current scenario, especially with like the current macro backdrop, and there's so much kind of geopolitical uncertainty. Credit markets don't look great. So I mean, we just talked about all these like intra Bitcoin metrics without talking about anything going on with like outside of the Bitcoin market, right? And with that, we have commodity prices going crazy, all this geopolitical certainty with Russia and Ukraine, credit markets not looking good, inflation running rampant. all these different kind of things going on outside of Bitcoin that can cause some type of liquidity event that in effect could affect Bitcoin. So with that in mind, it's like when you're playing a video game right now, like the macro backdrop's like on hard mode, and it's very difficult to kind of maybe talk in like kind of a several month or year end kind of time horizon when we could have any kind of crazy announcement with how fragile kind of the backdrop is. So I would say I just kind of look at this as kind of a week to week time frame and just look at the information as it's coming, and just keep an eye dynamically on what the information is saying as it's coming in. But in aggregate, I do think that overall the market looks very healthy right now, and kind of the area where I would feel like I feel comfortable flipping full on bull would be if we could flip again that key kind of 46 47k area, because I think at that point you kind of trigger a lot of the kind of a lot of the momentum based market participants or kind of trend following market participants, because I see the market as kind of there's value market participants and momentum market participants. And I think for those momentum based market participants to step back in, I think that's kind of above 46, 47K. And I see value as kind of the low 30s. So I think those value buyers step in the low 30s. The momentum buyers probably step in above that 46, 47K area. But until that, obviously we're sitting right below. And you don't want to get too bullish right below major resistance.
Always. People always tend to get overly bullish right at the resistance. And this is exactly what creates the supply as well issues right there. I think you've summarized, so many great points today on the show. So I definitely already thank you so much for sharing your wisdom of knowledge with all the viewers and listeners to the Nest Show podcast. And everybody, this is my final call and final recommendation, and almost an urge to go ahead and follow Will Clemente on Twitter one more time. We do have to get him past 600,000 followers. We are talking about at W Clemente III at W Clemente III. You do have to go and follow him on Twitter. Be the 600,000th follower, and I'm sure there's going to be some proper bonus to it. And to close off the show with 1 or 2 minute final takeaway from you, Will, do you have anything to leave our listeners and viewers with today?
I think I kind of had just summed it up in that last little spiel there, but I would just say for long-term market participants, I think a lot of the stuff going on geopolitically is just painting a long-term, positive outlook for Bitcoin as a decentralized bearer asset, and everything, and from kind of the Canadian truckers getting their bank accounts frozen to Russia essentially getting their reserves frozen and being locked out of the financial system, really has kind of highlighted the value proposition for Bitcoin as this decentralized bearer asset. And I think over time that value proposition is going to continue to shine. And with that, I think one of the beautiful things about Bitcoin is something called I've kind of dubbed it ideological malleability. And what I mean by that is it can be many things, right? So in 2020, 2021, Bitcoin was really, moving off of the inflation hedge narrative, off of all the monetary and fiscal stimulus at the beginning of 2020 after COVID. I think, recently some of this move to an extent has been kind of this narrative of Bitcoin just being a decentralized bearer asset, and people have kind of been waking up to the value proposition of why that's needed. It's one of those things where you don't need it until you do. And I think at this point in time, people are starting to realize why you do. And so that's one thing I think over time that's going to continue to shine for BTC. So.
Amazing insights all the way on today's Nest Show podcast. Thanks so much for coming on the show. Will Clemente has been our guest today. Thank you so much for coming over. This has been great time. Thank you so much.
Thanks, man. Appreciate you having me on.